Ladies and gentlemen, good day and welcome to INOX Leisure Limited Q4 and full year FY22 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanjesh Jain from ICICI Securities. Thank you, and over to you, sir.
Thanks, Lizzie. Good afternoon, everyone. Thank you for joining on INOX Leisure Limited Q4 and full year FY22 results conference call. We are joined on this call with INOX Leisure Management, represented by Mr. Alok Tandon, CEO, Mr. Kailash Gupta, CFO. I would like to invite Mr. Alok Tandon to initiate the proceeding with his opening remark, post which we will have a Q&A session. Alok sir, can we start now?
Yeah, thank you, Sanjesh. Thanks a lot. And good evening, everyone. I am Alok Tandon, and with me is my colleague, Mr. Kailash Gupta. And we thank all the participants who are on this call listening to this presentation. Well, our board has approved the quarterly results for Q4 FY22 as well as the full year of FY22, and the same has been uploaded on the website of the stock exchanges and the company's website. Well, we all know the last 6 to 8 quarters have proved that difficulties and adversities can come in any form, and we all know what we all went through, and challenge your preparedness and fundamentals as a strong corporate. The pandemic took its toll on the entire world, and none of us was spared. What the pandemic could not do was, as I've said earlier also, was to shake our resilience and drive to stick to our vision and stay true to our business philosophies. Our meticulous efforts, combined with our will to survive and succeed, and our team's determination to keep entertaining the country, has helped us in staging a remarkable turnaround. Q4, and in particular the month of March, saw a lot of lifetime records being broken and saw Team INOX setting new benchmarks in customer operations and other business metrics. Movies like Valemai, Bhimla Nayak, Gangubai Katewadi, The Kashmir Files, Radhe Shyam, and RRR brought crowds to cinemas and hordes and helped us rewrite history. The phenomenal end to the year has provided us a marvelous launch pad to step into FY23 with a strong belief in our country's passion for cinema. I will begin the presentation now and talk about a few key highlights. In FY22, we had the highest ever yearly ATP of 217 rupees. In FY22, we have the highest ever yearly SPH of 91 rupees. We have a strong liquidity position, and as of 30th April 2022, we had more than rupees 260 crores in cash and cash equivalents. INOX has added 32 screens in FY22, which is the highest in the industry. We crossed the highest monthly GBOC and F&B revenues in the month of March. So that's March 2022, which I'm talking about. We are the national chain, or the only national chain which is net debt free. We also launched India's first cinema wallet called INOX InstaPay. If I look at the Q4 numbers, in Q4 FY22, the revenue was 325 crore rupees as compared to 119 crore rupees in Q4 FY21. EBITDA at 21 crore rupees as compared to a negative 60 crores in Q4 FY21. PAT is at negative 12 crores as compared to negative 74 crores in Q4 FY21. For FY22, revenue is at 706 crores as compared to only 148 crore rupees in FY21. EBITDA is at a negative 87 crores as compared to a negative 204 crore rupees in FY21. PAT is at a negative 164 crores as compared to a negative 257 crores in FY21. Well, if I talk about a few metrics, in Q4 FY22, the footfalls are at 110 lakhs as compared to only 34 lakhs in Q4 FY21. In Q4 22, occupancy is at 24% as compared to 10% in Q4 21. ADP is at 218 rupees as compared to 172 rupees in the corresponding quarter. SPH is at 86 rupees as compared to 78 rupees in Q4 FY21. Talking about the full year, which is FY22, the footfalls are at 230 lakhs as compared to 38 lakhs in FY21. In FY22, occupancy is at 19% as compared to only 8% in FY21. ADP is at 217 rupees as compared to 170 rupees in FY21, and SPH is at 91 rupees compared to 77 rupees in FY21. We are glad to announce that in Q4 FY22, we have progressively narrowed the gap in NBOC and F&B revenues with the pre-COVID levels. Especially in March 2022, we have had the highest GBOC and F&B collection in our history. We have tried our best to keep our fixed costs under control. From March 22 onwards, business resumed to normalcy, hence expenses have increased. All rent and CAM negotiations are closed, and currently we are paying rent and CAM as per the agreement. We can see from the numbers that on quarter-on-quarter basis, our employee benefit expense, including agency manpower, has increased from 41.9 crores in Q3 FY22 to 47.2 crores in this quarter. This is because business resumed to normalcy from end of February 2022 onwards. Power and fuel and repair and maintenance expenses have increased marginally from 29.2 crores in Q3 FY22 to 30 crores in this quarter. Our expense towards rent and CAM during Q3 FY22 was 51.3 crores as compared to 89 crores in Q4 FY22. This is because we have started paying rent as per the agreement in majority of our properties. Our other overheads have increased from 21.7 crore rupees in Q3 FY22 to 26.4 crores in Q4 FY22. In terms of shareholding structure, as on 29th April 2022, FIIs owned about 15.37% of the company. The DIIs owned 24.88%, promoter and promoter group hold 44.04%, and the public and others own 15.71% of the company. The share price as on 29th April 2022 was 502 rupees 25 paisa, which gives us a company a market capitalization of 6,144 crores. As mentioned earlier, we have opened 8 properties with approximately 5,400 seats in the full financial year. In Q4 FY22, we opened 8 screens, 3 screens in Selvam Square, Vellore, and 5 screens in S Mall, Tumkuru. Additionally, we have opened another 6 screens in AIPL Gurgaon on 14th of April 2022, which is in this financial year. At present, we are operational in 18 states and 1 union territory, present in 72 cities with 161 properties, 681 screens, and we have approximately 1.53 lakh seats. Based on the agreements already signed, I would like to share that we have signed up to the extent of nearly 117 properties, 840 screens with 1.53 lakh seats. And once this entire pipeline is fully implemented, we will have 293 properties with 1,592 screens and 3.2 lakh seats. In Q4 FY22, we have 6 blockbuster films, namely Valamai, Bhimla Nayak, Gangubai Kathiawadi, The Kashmir Files, Radhesham, and RRR. And we are delighted to inform you that we have a healthy lineup of movies already waiting to be released. We all know what fantastic numbers KGF Chapter 2 has done, and it's only growing. We had great footfalls for Acharya, and we have a good block booking and good booking for Doctor Strange in the Multiverse of Madness, we are having high hopes with Jayesh Bhai Jordar, Bhool Bhulaiya 2, Top Gun 2 Maverick, Prithviraj, and Jurassic World Dominion, just to name a few. As far as capex is concerned, in FY23, we had planned to open 77 screens, and all of the upcoming screens would be funded through internal accruals. I would also like to reiterate that our liquidity position is very strong, and as on 30th of April 2022, we have more than 380 crores, including undrawn limit of 120 crores with us. Alternatively, as I always say, INOX owns 6 cinema properties and a head office, and as per the market valuation, if required, we can raise close to 400 crore rupees by doing a sale leaseback of these properties. As on 30th April 2022, our gross debt was only 85 crore rupees. That was the brief about the quarter, which has gone by, and now we can open up for any question and answers that you have.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question builds. The first question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, thanks. My first question is on the advertising revenue. Earlier you had said that this stream will be the last to recover after the box office and F&B recovers, and already we are seeing records consistently being broken in the box office. So in terms of advertising revenue, how are things versus pre-COVID in terms of mix of the sectors in terms of advertising, and what are the advertisers seeing in terms of, say, cost per thousand or the yield per screen, etc., versus pre-COVID, and there is a lot of pressure in terms of gross margin on most sectors in terms of advertising. So that is a challenge. So if I mix all this versus the first 2 points, when do you see full normalcy coming back in the advertising revenue if no wave 4 is there?
Well, Abneesh, let me tell you, I hope there's no wave 4, number one. So we don't want our cinema operations to be shut again. But let me tell you that slowly advertisers have started coming back. March has been a decent month for us. I can't say very good, but decent. We had some great movies and people wanted to advertise for those movies. And if you see that we have done 13 crores in the quarter, and let me tell you, substantial of it came from the month of March, because January things were just picking up. February things were just heating up because a few movies have started coming. But then March was a blockbuster quarter for us. Even the advertisers wanted to wait and watch, and they didn't want to advertise from the first movie itself. But looking at the footfalls of March, and let me tell you, April, and things have only improved, I think that advertisers will be back to us sooner than later. Earlier in one of our calls, we had said that it could be a matter of 3 to 4 quarters, but now I'm confident that in about 2 quarters' time, we should be back to normal where we were prior to the pandemic.
Right. Currently, if I see 2 sectors which are doing extremely well are hotels and multiplexes. Coming to multiplexes, what we gather is because of very good content pipeline, because of movies not releasing in the earlier years, you have a very steady stream of movies available. And second, people are still not going for overseas vacation, and even in domestic, people are a bit hesitant. They are not going for very distant domestic vacations also. So 1 year down the line, when none of these factors, 2 factors will be there, do you see pre-COVID consumption behavior coming back, say, in terms of occupancy? Or you see that this is more of a structural shift because now South Indian movies are being consumed by North India, so more steady supply, more content is available, so things may have improved a bit. It will normalize, but it will not fully go back to the pre-COVID occupancy levels, for example.
So I think the content pipeline, as you rightly said, is great. And if I look at all the movies that have released in Q4, have done extremely well. And I just named out about 6 or 7 of them. Going forward, whether it is The Beast in Tamil, whether it's KGF Chapter 2, whether it's a Sher Shah Shivaraj in Marathi, whether it's Runway 34, so we have got some good traction, which clearly goes to prove that people come out to see good content. That's one, and that's always been the case. And this, I think, will continue. So this is not because of the backlog of the movies, it's because people are now coming up with different genres and different ways of storytelling. The other advantage which you rightly said is that most of the movies are now dubbed in other Indian languages. So hence what happens is that the audience naturally multiplies. You are able to show a movie across the length and breadth of the country in the language of the choice of the patron. So that's another advantage, or I would say a tectonic shift which has taken place in the industry. And then you mentioned about that overseas travel and domestic travel is not taking place. Here, Abneesh, I would really like to beg to differ, because I know that all flights are going full, whether domestic flights or international flights, and the prices are haywire of the airlines. So which goes to prove that people are still going out, as well as, now there's no comparison, I can't say that those people are coming to watch movies, but yes, because of the good content and good pipeline, people are coming to watch movies on a giant screen. We all know that we were tired of sitting at home. We all know that we want to breathe differently, and that's exactly what today's cinema goer is doing.
Sure. And last quick question, any update on the merger, specifically on the CCI? I understand on paper you don't require, but any further insights you have that absolutely this is a done deal from a CCI? Any issue you envisage?
No, nothing has come to us till now, Abneesh. And where the other status are concerned, that we have already submitted our papers to the stock exchanges, and we'll take it forward once we get a reply from them.
And timelines as of now, no change to what you had mentioned earlier, right?
Well, no change to that at all.
Okay. Okay, sir. That's all from me. Thanks a lot.
Thank you. The next question is from the line of Arun Prasad from Spark Capital. Please go ahead.
Thank you. Thanks for the opportunity. Look, my question is on similar lines from the first participant. The question is, we've had a very similar quarter as compared to Q3. That is, October and November was a lackluster months in the December quarter. December was very good. Again, this quarter, Jan and February, which again lackluster due to the lack of content. Again, March is good. So very similar patterns, very similar kind of a strong movie in the last month. But why, and very similar pitfalls. So why there should be a drop in the ad revenue on a per screen basis? Again, secondly, why there should be an ATP also should be sequentially going down? Apart from seasonality, is there anything that we are missing, or any other phenomenon which is explaining this drop on a sequential basis?
No, Arun, I don't think we are missing anything, but you're right that December was great. Though, see, remember we just started opening up in October, November, and hence people were slow to announce the release of movies. And then we hit another roadblock where a few cities and a few states again were shut down. And slowly we started reopening again this January and partially in February. So again, all the movies lined up towards mid-February and beyond. So that's the only reason why December did well and March has done exceedingly well. Where ticket prices are concerned, SP is concerned, I always say that we price ourselves as per the cost structure of the property and the paying propensity of the people over there. So there is no shift in that. It's only that these two quarters, Q3 and Q4, have done very well because the content has been good and people wanted to see and enjoy those movies on the large screen.
Mm-hmm. So it is what I can understand is this basically Q3 is a seasonally strong quarter and hence it's the numbers both in terms of ATP and ad revenue and S&D, everything is better as compared to Q4. Is it what you are trying to say?
Sorry, could you repeat that, please?
I'm saying Q3 is a probably seasonally strong quarter in terms of spending pattern, both from advertisers' side and also the consumer side. So other than that, I don't see any. I'm not able to understand why, given the same similar content release pipeline, why the Q4 should be lower as compared to Q3.
Well, Q4, if you look at various other aspects, if you look at the advertising part, we did approximately in Q3, if I remember right, advertising was 20 crore rupees. Well, let me tell you, because things have started opening up, and then again we were made to shut down after December and January. So again, the advertisers pulled back. It's not that it's the cinemas who are not commanding in footfalls and revenues. It is that people just pulled back, and after we started releasing movies again, beyond mid of February, people started advertising again, and that's why we say that Q4 was lower than Q3, but not because of quality of content. It was because states had allowed cinemas to operate in bits and pieces with 50% of capacity utilization, 75% capacity utilization. So hence advertisers took time to come back.
That would also mean...
Arun, this is Kailash. I just want to add further to what Alok is saying. We need to remember that the November and December was the festive season. That had added a lot of, inventory or utilization of inventory in the advertisement especially. And, during the festive season, of course, the offtake on account of F&B and ticket price was also, added up, which has been not the case in Jan, Feb, March, especially because the Jan, Feb was completely off and March was working. So, and plus the movie, if you recollect, the movie Spider-Man was released in Q3, and that has added a lot of advantage. It's a English content normally, priced in more actually because it works in the especially in the premium screen, and add up by the 3D charges also. So these are a couple of reasons. The Q3 was better in terms of ATP and SPH, and because of the festive season also added up the advertisement, which was not the case in Q4.
Understood. So that means in the first 2 months of this quarter, your rent payment is also, whether it is full or it was negotiated amount?
Well, it was partly negotiated, Arun, but in March it was full.
So the March run rate should continue going forward?
Yes, the March run rate.
Sure, fine. My second question is on, I think you have added on management property in this quarter, the Belur property. Just curious, usually when do you add management property? Is it it's a decision based on availability of the real estate, or how do you decide on that?
Well, when we feel that the property is good and we would like to take it, but the owner says that he might as well run it, the P&L should be his, we don't shy away then from taking a management property. So today, if I'm not mistaken, we have about 9 properties in our kitty as management properties. These are properties which we feel will do good, but the owner feels that the entire P&L should be his, and we should give him the guidance and the expertise to run the property.
Okay. So here there is it is operated, and what is the terms for revenue share? Anything you can share further on that?
I won't be able to tell the revenue share, but it varies from property to property.
But it is attributed to...
Let me tell you, it's beneficial for us also. That's why we go ahead and sign these deals.
All right. Thank you. Thank you very much. That's it. Thanks.
Thank you. The next question is on the line of Jinesh Joshi from Prabhudas Lilladher Private Limited. Please go ahead.
Thanks for the opportunity. Sir, I have this question on InstaPay wallet that we launched recently. Can you explain how do we make money out of?
Well, InstaPay was launched on 30th or 31st of March. It is a stickiness factor which we want to have with our guests, that it's a wallet which they keep on recharging and they keep on getting points which can be redeemed at INOX. So apart from making money, it is, I would say, primarily to get guests come to our cinemas, for them to earn points on when they load their wallet to be used either at the box office or at the F&B counter. And every time they load monies, there's some extra points that are added to their entire wallet, which can be redeemed again for more tickets and more F&B items. So it is a marketing tool we have to ensure that people come to us and keep on seeing movies with us and spending more on the F&B items.
So basically, this is just one kind of a loyalty program, correct?
Well, it's a different than loyalty. Loyalty is where we have a lot of data about the customer, where we ensure that people come and watch a movie of their choice, they come and eat what they want. We publicize that whatever activities we are doing, we have special shows for our loyalty members. If we have a premiere, we invite our loyalty customers. But in this case, it's a closed loop wallet where they keep on adding, and it's a more value for them to have more items purchased from us and more tickets. There's value for money for this.
Okay, sir. And secondly, if I look at our movie exhibition cost, it was approximately 45.6% in this quarter. So is it fair to assume that we are back to pre-COVID terms as far as distributor share is concerned?
Yes, you're right, Arun. Janesh, sorry, more or less, yes, we are back to normal.
And sir, one last question. In this financial year, we have recorded highest ever ATP and SPH, obviously backed by some blockbuster content. Now going ahead, obviously in FY23, considering there is no fourth wave, we'll have some movies which may not be priced at the level at which they were in FY22. So do you believe that from these levels we are going to see a rise in ATP and SPH in FY23?
So, Janesh, we always say that is the rate of inflation, and SPH we always look at anything between 8 to 10% increase. So I think that this will only go up, and we all know it's a very cyclic thing. It's dependent on the movie, it's dependent how popular it is, it's dependent on the newness, it depends on the cost structure of the property and the paying propensity, which I said earlier. So there are a lot of factors for us to ensure and which make us govern the rationale behind the ticket price. So that's something which we keep on doing, but I'm hopeful it only go north from here.
Okay, sir. Thank you so much.
Thank you. The next question is on the line of Sanjay Jain from ICICI Securities. Please go ahead.
Good afternoon, sir. Thanks for taking my question. First, on the screening of movie per day, in this quarter, close to 3.3 is what I can work out the number.
Right.
And historically, we were at 4.5 to 4.7.
Sure.
Are we hitting that number now as we got into April and all the COVID restrictions are behind?
Yes. So all that is behind. So the night curfews have been removed. Weekend shutdowns are over. Property starting late in the morning, that is no longer there. So now in April, we are back to what we were pre-COVID for number of shows per day per screen.
So that inventory of 65-70 million seats, which we were having earlier, we are hitting that run rate now as we speak in the April, right?
You're right, Sanjesh.
Got it. And second one is on the number of movies. Now, how are we saving the pipeline? One is big budget movies and one is total number of movies. How does it look like for, say, FY23? Are we going back to that 900,000 movie releases, assuming there is no fresh wave of COVID and it's completely normal? Do we have that kind of inventory right now, the visibility to show 900 to 1,000 movies a year?
Yes, we have. And let me tell you that this Friday only, this coming Friday, we'll be having about 20 unique titles. So that's the content flow which we have. So apart from the mega blockbusters, we have a great pipeline. And I think the patrons will be spoiled for choice that which movie to watch during the weekend.
Okay. So we have enough pipeline and the visibility in terms of reaching that pre-COVID level of footfalls, right?
Absolutely right. Visibility is there, content is there. On paper, they are great movies. The advantage is that now various movies are dubbed in different Indian languages, so the market increases. So all those things are very positive.
Thank you. One question, probably a repetition from the earlier, but still not clear. Why our ATP is down quarter on quarter? Now, I understand we had a Hollywood movie in a 3D. We also had a Triple R which was in a 3D, probably doing much higher box office collection than the Spider-Man one. And most of the movie and the footfalls were again 11 million. Can you help us understand what was the occupancy for the Q3 in the premium end of the format versus what it was for this quarter? Probably that may help us understand the fall in the ATP and SPH.
So, Sanjesh, here the thing is that Q3 was a very festive quarter. We had Dussehra, we had Diwali, we had Christmas, and hence we were able to price the tickets very high. And that was the reason why Q3, and as Kailash said, with a few 3D movies also, we were able to command a higher ticket price. So whether it was Pushpa, Spider-Man, No Way Home, Suryavanshi, Anathe, 83, all did exceedingly well in Q3. There was a superior content. And also there were lots of movies which could pull in the crowd. Where Q4 is concerned, we had blockbusters also. But then there were movies like Kashmir Files, Radhe Shyam and others which were not in 3D. Maybe RRR was. But what I would say that pulled down the ATP in Q4 was that movies started coming only after mid-February. And some of the movies did very well down south. And in a few states down south, there is a price cap. And that came into play. So whether it was KGF 2 or RRR, where it was Andhra Pradesh or Tamil Nadu, we have some price caps. Valami I can think of doing very well in this quarter. Bhimla Nayak in Telugu doing very well in this quarter. Radhe Shyam, again, a movie which was primarily in Telugu and Tamil doing well, but all of these movies had a price restriction. And hence, that's the reason why the ATP of Q4 was lower than Q3.
Got it. On the South-based dub movie, it looks like there is a broader acceptance now on the dub movies, even in the Hindi belt. How are the ATPs for these movies? Are they equivalent to the Hindi movies, or they're still at a discount and there is an headroom to increase the ATPs for these movies in the Hindi belt?
Well, the ATP is again, I always say that it's got nothing to do with language. ATP is to do with the newness of a movie, with the demand of a picture, and how well we think it will run at a certain price point. So for RRR and KGF, we had the blockbuster pricing of what we would have had for a Hindi movie. I think they were higher than blockbuster also. So that's the ticket price these movies commanded. So it's got nothing to do with language. It's only to do with the pull and the excitement or the buzz which is there on the movie that we do a pricing on. And they were such great movies, RRR and KGF, that people did not mind paying higher than a blockbuster pricing also.
Just to add on to it, then how to look at ATP? Then that makes ATP a slightly cyclical, right? It depends on the kind of movie which gets released and how it is priced. Then how to look at ATP? When we talk about inflation-led growth in the ATP, this is also significantly dependent on how the content releases happen for that year, right?
Yes, absolutely. So, see, it depends. There'll be some blockbuster movies, there'll be mega blockbuster movies, there'll be regular movies. And ATP, I always say, increases, we will always increase it at the rate of inflation. I was talking about blockbuster rates earlier, to your earlier question, where I named a few movies like RRR and KGF. Let me tell you, Kashmir Files did amazing footfalls, did great numbers, but there the ticket price was an average ticket price. It was not a mega blockbuster pricing we did. So it all depends on the movie, Sanjesh. But confidently, I can say, and which we keep on saying quarter and quarter and year on year, that ticket prices will rate at the rate of inflation. And there are some great Fridays, there are some very average Fridays, and there are some bad Fridays. But that does not mean that our ticket prices will go down at the end of the year. I think they will only head north.
Thanks. Just one clarification on that 8-week window on OTT. we said that the window which we shrunk for the 4 weeks was supposed to end at March 22. That stands there, right? From April onwards, all the releases will have the 8-week window for OTT releases, right?
Well, may or may not, because see, we all know that, again I'm saying January and February were washrooms. People could not release picture in January and February. So that's been extended by a bit. But let me tell you, maybe in a month or two or beyond that, all films will have an 8-week window.
Okay. For the movies which got released in April, this 8-week window is still not applicable, right? It's just understanding, right?
It's not. So that we are see again. Remember one thing: when cinemas do well, we do well. And here it's not only exhibition. We are talking about the entire Indian film industry. We all have to grow together, Sanjesh. We all have to make money together. So we said that, especially INOX, I know that we have deferred it. We said that we'll discuss this in a month or two, and then we will request our partners that it should then go back to the 8-week window.
Good. One question on the bookkeeping. Can you just help us understand what was our March total cost versus March of a normal year? So that will help us understand how much cost saving we had achieved with all the efficiency drive in the COVID which we have done.
So, Sanjesh, the March fixed cost, which used to be 82 crore rupees per month pre-COVID, okay. We are close to now 76, 77 crore rupees in the month of March. But this will again go higher in the month of April onwards, because now it is all the cinemas are running with the full capacity. So electricity and manpower are going up, and we are building it slowly and gradually, consciously, because all these things were not built in the month of March, because fortunately because we had a bad January and February, so we decided to gradually build it, and now we are reaching to the stage where all the manpower and electricity costs are coming to the full fledged.
So we will be hitting the same cost run rate of 82 crore.
Yes. So I'll tell you, we will be having, if you ask me the fixed cost structure, the answer is yes, we will reach to the same cost number, because the number of screens on the property has also gone up during the COVID.
Correct. So we have maintained the cost, well then screen count has gone up. To that extent, there is a saving report.
Absolutely, of course.
Got it. Yeah, that's it from my side. Thank you and best of luck.
Thank you, Sanjesh.
Thank you. The next question is on the line of Kapil Jagyasa from Edelweiss Financial Services. Please go ahead.
Thank you for taking my question, and congratulations for the very good quarter.
Sorry to interrupt, Mr. Jagyasa. We are not able to hear you clearly.
Now it is better?
Much better. Thank you.
Yeah. So my first question is, most of the FMCG players that we are witnessing this quarter, or probably even in the last quarter, they are cutting down on the media spends, citing this commodity inflation, and most of the advertisers on multiplexes are these FMCG players. So would your confidence of advertising revenues reviving in the next 2 quarters, isn't that too optimistic? Your take on this?
Kapil, I don't think. Well, that's why I said that January, February people did not, and March they started coming back, April they have. So looking at the trend, I think that in 2 quarters, we should be back to pre-COVID levels. Automobile, various other sectors who advertise with us, we've got the annual clients, we've got some regional clients also. So now again, this is all assumption, but I'm very hopeful that after 2 quarters we'll be back to normal.
Okay, thanks. And my next question is, earlier I believe there used to be around 4 to 5% increase in footfalls on an annual basis. But now with this emergence of OTT and also some small budget movies, being shifted over there or directly being released on OTT platforms, what should be the growth in footfalls going forward that we should be taking for our models?
So, Kapil, very difficult to say. You're right that OTT is there, and I've always said that it complements each other. They will be there. It's not that we can wish away that OTT is not there, but it all depends on content. We have seen what happened with RRR and KGF 2. These names I must have said for the 6th or the 7th time in this call. they have brought people back to the cinemas. People want to see full action movies on the cinema. We are seeing some great traction, great booking for Doctor Strange, which is coming this Friday. So these are movies which can't be enjoyed in the confines of your house, however large television you may have. So cinema watching is not going anywhere. Footfalls will keep on increasing as they've increased over a period of time. And again, let me also tell you, which I talk about, is that we pampering our guests. So today I know that if it's a Marvel movie or a Bond movie or any other movie, people like to watch it in 2 or 3 different formats. So that's why we've got an IMAX with us, we have got an MX4D, we have got LED, we have got Insignia, you name a format, ScreenX, where you see the movie on the side walls also. So it is nothing to just get in more footfalls and to encourage our guests to come out and watch a movie with great projection and uncompressed sound. And that will continue happening, Kapil, quarter and quarter and year on year.
Thank you for such an insightful answer. And then one related question, kind of related question. So of late, these regional movies are working quite well. This quarter we are seeing and earlier also. And so like on the OTT platform, some of these Korean movies or rather Korean web series have done well. So are you sensing some Korean movies, which are really popular being offered in the multiplexes here in future?
I don't know. I'll have to ask our programming team. But yes, when you talk about Korean, it rings a bell that we showed that K-pop BTS on our screens. We've shown a few K-pop, I would say, concerts again on our screens, and we have had a house full shows. So 2 weeks back, we showed something called 17, and 17, I think it was too old for that, but all youngsters went and saw it, and it was a house full shows we had. It was a K-pop movie, and but where you were talking about Korean films, let me get back to you after I speak with the programming team. But yes, I remember there was a Korean movie which did very, very well ages back. Parasite, and we all loved watching it. So maybe there are a few more of that genre, and so let me get back to you on this after we discuss with the programming team.
Right. Thank you. Thank you for all the answers. Thank you so much. All the best.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Patanjali Srinivasan from Mirabilis. Please go ahead.
I'm just trying to understand about our distributors and our agreement with respect to the new movie. Because I believe during this quarter, we had a very big budget movies getting released, and how does it limit us with respect to giving more shows to a particular movie or reducing shows for a movie that's not doing that well?
So Srinivasan, it's not limited to this quarter. This is the job of a programming team where they discuss the terms of various producers and they discuss the number of shows we will give them. So this is nothing to do with the Q4 which you're talking about. That's, I think, the bread and butter of the programming team, that how they negotiate and how many shows of a movie they give. So that's a standard thing which they keep on doing quarter on quarter, year on year.
No, so I just want to understand what is our flexibility with respect to these agreements.
What is the
flexibility with respect to these agreements?
No, so that depends on, again, not one agreement is standard, and we have various agreements with various distributors. So they all vary week on week. It's not that one thing fits all. So what the programming team ties up with one distributor may not be the same thing with the other distributor. So there's a lot of flexibility from both sides. There are some which are rigid. So it depends on which agreement we are talking about. And I can talk about my chain that all decisions are taken together with the distributor, and then we decide on a movie, and that way it's playing, what's happening, number of shows, all that.
Okay. Sir, and with respect to the occupancy, I believe March and April would have been much better compared to the previous month. Can you give us some rough numbers on what is the occupancy level for April?
Well, I can't give you for April because that's the current quarter which is running, and I don't want to just predict and give you a number which is not in public domain. But let me tell you that the footfalls are great, and KGF Chapter 2 has done amazingly well. And we all know that. We all know that what the gross box office collection this movie has garnered.
Okay. Yeah. Thank you.
Thank you. Ladies and gentlemen, that is the last question. I now hand the conference over to the management for the closing comments.
Well, thank you all for taking interest in our company, and be rest assured that with the pipeline that we have just talked about, I think that FY23 will be a great year for Indian cinema. Thanks a lot, and thank you.
There are more than 20 parties in the conference.
Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.